Despite the risk, many Nigerians are ever willing to rush into the next Ponzi or get rich quick scheme. The recent crisis affecting gambling and investment service platform 86FB has been a rude reminder to Nigerians of the disadvantages of investing in Ponzi schemes and unverified investment platforms that promise higher than average mouth-watering yields. In the last 10 years, Ponzi scheme operator activities have increased in Nigeria. Mavodi Mundia movement, popularly known as MMM, which is arguably the most well-known Ponzi scheme ever developed in Nigeria, will not be quickly forgotten by Nigerians. When the scheme finally collapsed between 2016-2017, the CBN disclosed that investors lost 12 billion naira. Since MMM, a number of other dubious schemes have entered the scene and carried on the same cycle, exploiting many more Nigerians. The list include Dantata Success and Profitable Company, Ultimate Cycler, MGB Global, OneCoin, Bitcoin Company, Money Rights, No Failure Development, and X World Emerging Global Holdings Company Limited, most of which have been shut down by the Securities and Exchange Commission (SEC). Nigerians have shown time and again that they have a high appetite for high risk, high return investment, regardless of the lack of a business model inherent in most of these schemes. Many are ever willing to rush into the next get rich quick scheme, taking advantage of the country's large populations and woeful economic condition. Ponzi scheme operators are ever ready to introduce their scam to Nigerians as quickly as possible. Despite the Security and Exchange Commission's countless warnings to investing public against the activities of these unlicensed market operators and promoters of fraudulent schemes, many seem to continue to fall victim. It now seems as though the more of this scheme the SEC shut down, many more spring up and scam more victims by promising them mouth-watering returns on their investments. This has been a recurring challenge and as of late grown aggressively as more Nigerians have fallen and are still falling victims to Ponzi schemes. Ponzi schemes, also known as pyramid investments, are a form of financial fraud that lures investors with the promise of high returns but often end up giving no returns at all, with a possible loss of investor total capital. Over 200 billion naira have been lost by millions of Nigerians to Ponzi schemes in the last 10 years. For the notorious MMM that operated between 2015 and 2016, 3 million investors lost over 18 billion naira. Nospeco investors also lost over 100 billion naira within the same period. The Nigeria Electronic Fraud Forum, which was unveiled in the year 2017, stated that the Nigerian investing public also lost another 12 billion naira to MMM. Recently, the Security and Exchange Commission announced that there is an online Ponzi scheme under our investigation. Some of those who have suffered from these schemes have been heartbroken. Some have committed suicide. Detailed investigation revealed that the latest incident involved a case of suicide that has to do with four investors who were defrauded through an advertisement placed by a company on radio, podcast, and other social media platforms, calling for participation in the company's various investment plans, which included logistics and bike investment, customer relationship management investment, education and virtual reality for students, location sponsorship investment, real estate, with mouth-watering returns hovering between 60 to 120% per month. The deceased was said to have taken a loan of undisclosed millions of naira from the bank, which he invested in the company. About 3 others also attempted to take their lives when they could not withstand the pressure from the bank where they took the loan. Recently, victims of the 122 million naira Umba forest scam stormed the headquarters of the Economic and Financial Crimes Commission (EFCC) to demand the arrest and prosecution of the company's CEO, Mr. Maxwell Odum. The protesters allege that they were defrauded of a whopping sum of 122 million naira in a scheme promoted by the firm with a promise that they will be getting a 15% return on their investment every month. The company had since reneged on its promise on payment of returns, according to the protesters. Already, the EFCC has arrested and is prosecuting about 10 Ponzi scheme operators who have allegedly fleeced Nigerians of over 12 billion naira between October 2020 and August 2021, after most of these operators had promised their victims attractive returns on investment as high as 55% after their first month of investment. A bait swallowed by thousands of Nigerians who have since gotten their fingers burnt. Mr. Martins Olumide, our financial analyst here at Soget, explains that a Ponzi scheme is considered a fraudulent investment program. It involves using payments collected from new investors to pay off the earlier investors. The operators of Ponzi schemes usually promise to invest the money they collect to generate more profit with little or no risk. However, in the real sense, the fraudsters don't really plan to invest this money. They intend to pay off the earlier investors to make the scheme look believable. As such, a Ponzi scheme requires a constant flow of funds to sustain itself. When the organizers can no longer recruit more members, or when a vast proportion of the existing investors decide to cash out, the scheme crashes. Nigerians need to be wary of Ponzi and get rich quick schemes. With a Ponzi scheme, the investors are made to believe that they are earning returns from their investment, but in reality, the fraudsters behind the pyramid scheme are aware that the only way they can make profit is by recruiting more people to the scheme. Most Ponzi schemes comes with some common attributes, such as promise of high returns with minimal risk, while in the real world, every investment one makes carries with it some degree of risk. In fact, investments that offer high returns typically carry more risk. So, if someone offers an investment with high returns or few risk, it is likely to be a too good to be true deal. Chances are the investor won't see any returns. For example, if one invests in the shares of a given company, there are times when the share price will increase and other times it will decrease. That said, investors should always be skeptical of investments that generate high returns consistently regardless of the market conditions. Most Ponzi schemes are not registered or regulated by the government. Before rushing to invest in any company or business opportunity, it is important to confirm whether the investment company is registered with the Security and Exchange Commission or any other government regulator.
This video was brought to you by Sogit. Buy or sell your Bitcoin and perfect money on Sogit.com. We will pay you instantly within 2 minutes. Sign up today at sogit.com/register.